Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in today's free video I wanted to compare two tickers because obviously we've seen some pretty wild swings in the market here as of late. Friday and into Monday was a very significant bounce for the S&Ps, and you've seen a lot of stocks piggyback off of that, as you might expect. Well, now what I'm trying to think about is which of these may I actually have opportunity to buy versus which of these that it might be best to just stand off from. Two that I'm comparing today are WDAY, and then the second is going to be Adobe. So when I look at these charts, one of the first things that I enjoy doing, or one of the first things that I think just helps me get a good foundational bias, is to step back either to the weekly or the monthly chart in some cases, but just ask myself, am I in a pattern of making nice higher highs and higher lows? Obviously, in this case of Adobe, you are making a great pattern. When you step over into WDAY, it's very easy to see that the pattern is just the inverse of that on, in this case, the daily chart. If you find that you're still working to make pattern recognition a better part of your trading, or maybe if it's not something you enjoy doing, another way you can do something similar is to add a study, and in this case all I'm looking at are the 50, 100, and 200 day moving averages. These do exactly the same thing of just keeping you on the right side of the trend. And now when you look at this chart, instead of thinking, oh great, I've got a study over here, or I've got a squeeze over here that I'm going to play this to the long side, you notice it's a little bit more right up into resistance of these key moving averages. If we step back over and make that comparison in Adobe, and it's worth pointing out that the Adobe squeeze is off the weekly, which is where I'm trying to point out the big move that I think is coming for those guys. But in both instances, WDAY clearly bearish against your moving averages, Adobe clearly bullish. So that's very basic, but it's one of the things that I think will keep you out of trying to buy things like WDAY, because you could look at this pattern and say, wow, it's had a really great pop back up, but just don't ignore the fact that in the big picture, it is still in a major downtrend. The other thing that I think is very important about WDAY, and you can hide your studies here for just a moment to run this, but just look at how these previous advances, if we just consider them from a given point value, are pretty much exactly into where we are now. This is one of the levels that I wanted to run, and then you've got another previous swing right here. So all this is saying to me is that inside these previous swings, this was the point value that the stock was able to muster up some strength and push higher, but then it saw significant downside moves. So try to keep yourself out of trouble by recognizing those bigger patterns. If the price patterns on this can shift intraday, I'm going to look for bearish opportunity against these zones. If Adobe can pull back a bit, that will be the place that I'm looking to add some bullish exposure. So hopefully that helps keep you on the right side of the market in the current kind of wild environment. Another thing that I'm excited about checking out on this Wednesday, and I think will help everyone that watches it, is Bruce's course on the directional guide to making money in a bear market. So what Bruce is going to be doing is Wednesday evening, he's got a 2-hour course where he's going to go over the instruction and the concepts that he uses in these types of situations, and then on Thursday he will be trading them live with you. So I think any of you that have spent some time with Bruce know the value of his work. He is very good at what he does, and he's good at explaining it. So I'm looking forward to check it out, and I hope you guys find that helpful. Have a great rest of your night, and I will see you at the next free video.